Although oil showed some gains on Friday, it returned to $80 per barrel in the Asian session on Monday. Are oil traders thus responding to the Fed's intention to raise interest rates, or is the market sentiment changing for other reasons? Lately, oil has reacted mainly to data on the U.S. oil and fuel inventories only. Thus, the asset will most likely continue to trade just above $80 per barrel until Wednesday, unless there is a new unexpected news that could have a severe impact on the energy market. Brent crude oil futures have been trading under pressure for the second week in a row. As a result, the asset has already lost 8%, which is a significant price change. For now, the level of $80 is seen as variable support for sellers, as there is a decline in a short interest near this level. However, if the price fixes below the 80 mark, the benchmark will gain stronger downside momentum and suffer heavy losses. Meanwhile, the yellow metal has fallen below the mark of $2,000 per troy ounce and is currently trying to settle at around $1,980 per troy ounce. Gold futures are in a bearish correction after hitting $2,040, and the local high of the upward cycle, notably the uptrend, remains intact. If the price rises above the 2020 mark, a subsequent increase in the volume of long positions will push the metal up to a new high. However, the asset may extend its downward correction. In this case, the market will get stuck in a range, with the market participants waiting for the new trends to determine the best entry point. Speaking of fundamental factors, the main reason for lower gold prices is expectations of a further interest rate hikes by the U.S. Federal Reserve. This makes gold less attractive than the U.S. government bonds. Although this puts some pressure on the yellow metal, its light is unlikely to intensify, as was the case a couple of weeks ago. Investors will now await the upcoming FOMC meeting, and thus the most likely scenario is that gold will trade sideways at around $1,975 per troy ounce. As for the ruble, it's still drifting in the range of 81 to 82 rubles per dollar. However, in the after-hours trading, the quotes made another attempt to drop below 81 rubles. This signals that market participants expect the Bank of Russia to take a relatively tight stance on a monetary policy and keep the key interest rate unchanged at its meeting to be held this week. Nevertheless, no one intends to take risks, so the market situation will hardly change until Friday. And that's all for now. We wish you profitable deals. See you on our channel with a new video in a couple of hours.